Equity Research joining in on the show right now. Trip, hi, morning. Great to have you on the show, Trip. You've tracked Infi for so many years and seen some of these buybacks in your journey. Disappointed, you think? Did you expect a higher premium?
I think they did what they did in the current situation. It makes sense because if you realize the macro conditions are not healthy. And I think the sole purpose of a share buyback is to reduce the number of shares, and hopefully that should give some boost to the EPS down the road. So I think investors may have been disappointed, but we have to take the context in the right manner, where the macro conditions, tariffs, AI, and a lot of reinvention will need to happen. So I think what Infosys has done is right.
All right, what Infosys has done is right, but Trip, do you believe that the other companies will also follow the suit? Because the recent uptick that we have seen in the IT sector back home did start with the Infi announcement, but the other companies will also follow this, and any company in particular that comes to your mind could be likely to announce such.
I think I would assume, like you rightly say, almost every Indian company will need to do a share buyback, because if you look at the industry as a whole, it is in a holding pattern. They're all in a standby mode, wait and see. So while they do have a good cash position, I think I do see almost every major Indian IT services company to do share buybacks. But the big question is this the right approach, or there could have been a different approach? We have to, again, not lose the sight of what are the strengths and weaknesses of Indian IT services company. So, we can go into details of that, but I think considering the situation, the strengths of Indian IT services company, and the macro backdrop, I think what the share buyback is the right strategy, but will it boost the stocks like 15-20% in near term? I doubt it.
Right, Trip. So when you say that there could be more companies in the offing to follow suit, help us understand what this would mean for liquidity in the secondary market for IT companies. Because if liquidity is being mopped up via share buybacks, how does that position IT when it comes to the overall market, and then what the market perspective could be towards IT stocks?
See, I don't, at least for these I don't think just 2 to 3% suck off, if they suck off the liquidity in the shares, has such a major impact. I doubt it. I think the way to think about is your EPS numbers will get boosted because of lower shares. And if your multiple remains the same, then the stock goes up. But the problem is, same problem that Accenture is having is, if a company says, I'm going to provide an AI services to you, first that whole company should implement AI services themselves. Because the problem in the industry is, when you think about AI, it is all about efficiency. And the problem with IT services companies are, they say, okay, we are going to implement an AI project, and if it is X dollars, we'll charge you 2X for that because it's an AI project. And the customer says, no, go home. Because the thinking is, if you're using an AI offering and you're doing an AI services, it should be AI efficient. That means if somebody is going to come and say, I'm going to do an AI implementation, the cost to you is not X, but X divided by 2. That is the kind of narrative the companies, at least in USA, are expecting. And Accenture has failed to deliver on that narrative. And the good thing is, Indian companies, when in doubt, keep your mouth shut kind of stuff. So they're doing the right approach. And they are learning from what other companies are doing. But there are some strategies these people, the Indian companies, can do. But I think it has a risk associated with it. So I think being quiet, being mellow, being under the radar screen, because the problem is, if all of a sudden Infosys comes up with a very good numbers and beats left and right, the company is not going to benefit in long term, because that will easily take the administration in USA will take immediate notice to these companies, and it's not healthy. So I think the current approach, being under the radar screen, under the radar, being a little bit mellow, is the right strategy in long term, because there are too many moving parts and nobody can get a good pulse on what is going to happen. So in that situation, I think share buyback is the best approach to keep the investors engaged and not create a narrative that can go either way.
Sure. Trip, how is the earnings and the macro environment looking like? While sure this buyback is going to lead up to a jump in EPS by about 3% for the full year, and yes, Infy themselves did raise their FY26 forecast, but how is it that you're mapping the entire environment for IT services per se?
See, I would say this is going to be challenging, because the narrative has to be very strong and forceful. And that is not coming across from any IT services, other than some analysts are saying IT is a big revenue boost. Sorry, AI is a big revenue boost over the next 3, 4, 5 years. You can't just run a company on slogans. It has to come up like I have the thought leadership. And right now, almost every IT services company is a disappointment. I'll give an example. Infosys has something called Topaz. Means nothing. So what the IT services companies are saying is, show me the exact steps A to B that you can do. I can go into details, but the idea is IT services companies should come across like they have a complete handle of holding the company till the end. Right now, only IBM is a company which is able to do that. And all the other IT services companies, and including Accenture, have failed to deliver. What IBM is saying is, here is my software portfolio of products. Here is my AI portfolio of products. Here are my relationships and partnerships with Google, OpenAI, Microsoft, Alibaba, and DeepSeek. You let me know which model you want. We will come and help you out. And we have, by the way, our own Granite models. And then you can do this whole thing on Watson X. So it is a very comprehensive offering. That is, you are holding the customer from conception to implementation to support, and doing it at a very holistic level. Indian IT services companies are very point solutions. They can't think holistically in many situations. They are still thinking in a digital era, like digitization of ABC. That has been superseded by AI, and AI is moving at such a fast pace. Something we follow AI industry very closely. Something that was so cool. I'll give an example. 2025 was supposed to be the year of agentic AI, that is agentic computation, agent-based AI systems. It only lasted 6 months. That has been superseded by a completely new paradigm, which is called context engineering, which puts many things together. So the pace of innovation is so fast, and somehow I don't see any IT services companies being able to be at the leading edge of the change. When you have a change, it is an opportunity, because the customer is confused and you should go in and remove the confusion and you get paid. That's when the industry creation happens. That's exactly what Infosys did during Y2K. It was confusion, and they cleared up the confusion, and that put Infosys on the global scene. That's an opportunity that exists, but the risk associated with that is, if Infosys comes across as a very smart in everything, the administration here, that is in USA, may penalize them for that. So it's a very risky situation. You don't want to be on the radar screen of any country's administration, because they will penalize you unnecessarily. The thing is, you should have those capabilities, only trigger those capabilities when the time is right. And I don't think the time is right, because if you look at all the investments coming from almost every part of the world. They may take it other way around, the success of IT services companies, especially from India. So it's to be under the radar screen and just execute on share buyback.
All right, Trip, with this we let you go, but thank you so much for taking the time out and speaking with us, and not just Infosys Buyback, but really lots, what all is happening with respect to AI and why there's an uncertainty that whether or not that Indian IT companies will win the AI race at this point in time. But thank you so much for speaking with us. Well, let's get back to the broader market setup. How is it looking like, and which are the stocks that you should be keeping on your radar? Let's try discuss all of that. And for this, let's